It was a very nice. Okay, so entries and confirmation. Now, in entries, we have several, we have a lot of entry types, but what am I going to teach you today is just the entries about zone flip,
Okay.
the zone flips. This is what I'm going to teach you today.
Okay.
And the rest of the entries, I want you to go and study them on my free course. We have the formation entries,
Oh, yes.
which we use, and of course we have liquidity engineering,
Ah, yes. I understand.
and we have failed liquidity engineering.
Yeah.
So all these are very relevant in this
Yeah.
program.
Okay.
So you
Yeah.
you you go there and study them, and of course, after studying them, we will have a session. Whether you have any question concerning these entries, then we will
Okay.
cover from there. So today I'm just going to teach you zone flip, and we are
So,
going
so
to.
can I ask a question here?
Yes, sir.
The formation means the shifting structure by inside of double
Yes,
break.
yes, yes, yes. Whether you
Yeah.
have the inside formation or sometimes we have the outside formations. So the video is trying to
Yeah.
explain all of
Yeah.
that
I
types of
watched
formation.
it. Yeah.
Yes.
Yeah.
For example,
That's a
this,
great video.
for example, this entry today I took using formation and
Yeah.
liquidity engineering. So we had this formation, inside formation, and of course we
Yeah.
had the liquidity
Liquid.
engineering. So
Yeah.
you could use both here in
Okay.
this situation. So yeah, you go and study them. If you have any question, we'll have a session where we'll clear all the doubts. Okay,
Yeah. Sure. 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 Yeah.
thank you. Now, from here now we after learning this zone flip, we're going to have also to see how the market will confirm the direction that we have to
Yeah.
trade. So we'll look different types of confirmation
Okay.
and
Sure.
how we determine the confirmations. Okay. So right
Sure,
now we
sir.
will start with stone flip, and I know this Zoom. I didn't have the premium version of this Zoom, so
Ah,
I think
okay.
first session will deal with this. Then I'll send another link. Will deal with confirmation. Okay.
Okay. Sure, sir. Sure.
All right. Good. Now let's start with zone flip. So if you remember correctly, in the previous sessions where we talked about candlestick anatomy, I said where every opening and closing of a candlestick is a zone.
Yeah, exactly.
And uh, when I say a zone, I simply mean supply and demand, or support and resistance. Sorry, support and resistance. These are the zones that we always look for in the market.
Okay.
Now, when I talk about a zone flip, it's actually when if you have studied the video about um, camouflage and candlestick anatomy in my free version, you'll
Yeah.
get an idea of zone flip because
Okay.
some of the types of the zone flip are in this category of camouflage and candlestick anatomy in those free version videos. So go there and watch them. They are very
Yeah.
relevant video to watch.
Yes. Yes.
So zone flip is simply when you have a support or a resistance,
Okay.
when you have the market, simply a flip is where either a support or a resistance is being broken. So if
Okay.
we have a broken a resistance, that means we have a buying uh, um, entry.
Okay.
That resistance will turn to be a support.
Okay.
And if we have a sell entry, that means the support is being broken, turning that support to be a resistance. So
Okay.
we are taking these entries after the zone is being flipped. Why do I teach this? Because in this program, I've seen so many entries. I, I take them through this zone flip. So
Okay.
there's a lot of entries sometimes you'll take using zone flip.
Okay.
All right, so that is good. So we have types of zone flip,
Okay.
and in we have almost five types of zone flip. But today I'm just going to explain three because the five the other two is what I've talked about, the camouflage and the candlestick anatomy, which are in the free version link that I've sent.
Okay. Okay.
So
Perfect.
go them and study. So today I'm just going to teach you three. The first one is when the market creates multiple touch at a same level before breaking. So when you have a high and the market is trying to break that high but failing multiple times, it can be twice or many touch before breaking that level.
Okay.
So that level can be termed as an entry level. So when we have a full body closure at this
Okay.
level, that is
Okay.
how that is the point where we are going to take that entry. All right.
Okay.
All right. So this is the first one where we have multiple touch at a same zone. For example, in the bearish momentum, you can see the market touching a certain type of zone, and then from there you will be able to take that entry. I will show you an example. Yesterday, I took an entry using this type of entry. I mean, this type of zone flip. So this is a number one zone flip. All right. So number two is when
Okay.
the market close below and then close above and then close below, or sometimes close below and above and then close below on a same level. For example, we have this is our break here. Okay, this is our break of structure. And then you find the market
Okay.
closing inside, all
Okay.
right, and then close above, breaking this previous high. So we
Okay.
can use this level here as our entry point. So
Okay.
uh, uh, this is also a type of zone flip, which is very, very beautiful. And you can use this to trade any pair because I have examples trading this type in in other pairs like USD, JPY, and so on. So when you have a level where the market breaks and then coming to close inside buy body, then coming to close again outside, breaking this previous high, Then we can
Okay.
use this level here as our entry for sell.
Okay.
Okay,
Okay.
good. So this is the that second type of a zone flip. Now the third one, which is my favorite, the third one, which is my favorite,
Okay.
is when we have a, a weak closure on a certain high, and then later the market breaks that level by body. When we have
Okay.
a break, but just by weeks here at this point, just by a week. And then
Okay.
from there, we have a break later. And this can be it can be inside or outside. In the outside, we can find where the market breaking that level, and then after breaking that level, the market performs a micro test. A
Okay.
micro test, just a
Okay.
small test, just by weeks, and then breaking that level of a micro test. Then later on, we'll find the market coming with a rounded test.
Okay.
So we can use both of these trading. This is also a type of a zone flip, since because this was a support area, I mean the resistance area, then it was broken. Now the market is trying to create another resistance area by multiple touches.
Okay.
Yes. And here in this scenario here is when the market is failing to break that level. So it is maintaining, but later on breaking that level. And you must make sure that after breaking this level that breaks has also to break this wick that failed to break this high, right?
Okay.
You
Yes.
must make sure that wick is also being broken. So same applies in a selling momentum. You can see the market creating a weak failure, and then later on market breaks that level, and we can use that area as our entry. Or in the other version, you can see the market breaking that level completely, and the market performed a macro test at first, then breaks that micro test,
Okay.
and then from there the market performs a rounded test. So
Okay.
these
Got
are the best positions for you to trade. So these are the entries about zone flip.
Okay.
And the stop loss, you'll be wondering, the stop loss. So at any point, we have a candle that breaks, okay?
Okay.
And before that candle breaks, we have another candle below. So that second candle is the point we put stop loss in every
Ah.
in every entry of the zone flip. So the second
Done.
candle before that candle that breaks from here, example, the candle that breaks, the second candle, if it is here, that is the point for you to put the stop loss. So
Okay.
let's go to the chart and try to
Okay.
see.
Can I ask you a question here?
Yes, yes.
I'm still confused about how to mark the exact support and resistance. How we mark exactly the
Okay,
support and
okay.
resistance.
That's a very good question. Sorry, I didn't. cover that up. So in any support and resistance, we have the
Okay.
origin. The origin meaning the origin high and the origin low. Now,
Okay.
from that support and resistance, first we have to determine the origin high, or in a support you need to identify the origin low, meaning the
Okay.
start, the point where this consolidation started. So from that
Okay.
point, you find a candle, the last
Okay.
candle. For example, if it
Okay.
is it is the resistance, meaning you'll find the last buying candle here.
Okay.
So
Okay.
from that last buying candle, there are two ways. You can mark from the wicks and the wicks below
Okay.
of that candle, or you can
Okay.
just mark the top wick of that candle.
Oh,
So
okay.
you can choose both. You can mark this from week to week, or just using the top week from the start of the top week and
Okay.
the end of the top week.
Okay.
Same applies in a support. You find the last selling candle. All right.
Okay. Yes,
And from
exactly.
there now you can choose either to mark the wick and the wick of that candle, or just
Okay.
using the top, the bottom wick. So you can
Okay.
use, that is how we mark these levels. Okay.
Yes, exactly. Okay. Thank you. Thank you.
All right. Thank you. So let's see some of the examples. So
Okay.
yesterday, let's start with the yesterday entry. So yesterday I had uh, I had a beautiful entry. I think it was around this area. Let me check. Um, right. Okay, good. Now we had this entry here. You can see it clearly in the 3 minutes or 1 minute. After analyzing all the confirmation and all that, and then we had this area where the market uh, created a low here, and this low was broken,
Okay.
and this low was broken,
Okay.
creating now, okay, you can see here, this low here was touched multiple times.
Yes, exactly.
The market failed to break that area for the multiple time. And you can see
Okay.
how I marked this area. I marked using the week, the last the last week of this
Okay.
candle origin. That is
Okay.
the point I used to mark this area. So that was my entry. That was
Okay.
my entry right there. And that was the entry right there. The stop loss, you put the second candle. If it is too high, for example, in this case, it was just around 20 pips, not too high. So you can put the stop loss there, and you can target the pips that you want to target.
Okay.
So that was my first entry yesterday, using this formula and using this entry type. And of course, I had another one. I can't quite remember who. It was somewhere. Okay, let me go to the 4 hour. I'm sorry, I didn't pay this premium, so I can't
Okay.
cut.
Okay.
I guess I will have a time because I'm so busy right now.
Okay, sure.
I'm having a lot of projects. Okay, so I had another one. I think it was in this point. Let me check quickly. The entry, this entry here. Let me check. Let me check here. You can see. So this 4 hour candle that it was opened here after the confirmation of going bearish. We had this break of structure. Some of my students took the entry here at this break of structure, this formation here. But
Okay,
myself, I took a zone flip. Where is the zone flip? Here. This was the last selling candle. And then from that week, I marked out the level, and that level was tested multiple times. And we had
okay,
a week break,
okay,
and the market later on breaked that level and that last week. You see,
okay.
confirming this entry. And that is the point I took my entry, and the stop loss was the second candle from there on top that, and we had all this momentum going below, almost 100 pips, 150 pips. See?
Yes,
So these entries occurs almost every day. Almost every day. And another one I remember I had I had an entry. Okay, let me go here. I remember I had another entry. Mm, okay. Mm, okay, let's check today. Let's check today. Today. Now, you can clearly see, although it's not so visible, it is not so visible. Let me see here. Yeah, I don't know if you can see it. Let me use maybe. Okay. It was today. One of my students sent me this entry. Uh, okay, here. If you observe this entry clearly, it was a liquidity engineering, this entry here, this point here. It was a liquidity engineering, but this was based on a zone flip entry. Why? Because this was our level. And since this was our level, the market tried to break in and out most of the time. So that level was a very relevant level. And later on, the market breaks that level, coming also breaking this high and this high over here. And then the market performed a rounded retest towards that level. And the stop loss was the second entry. This was the first candle breaking that level, and this second candle is where you're supposed to put the stop loss. It was actually a very small stop loss here. From here to here, it was just 17 pips. And he managed to get almost a lot of pips from there. And he is still holding. So you can see 100 pips just by this move. 100 pips. And of course, we had another re-entry just from this entry. We had another re-entry by using also zone flip. If you observe here correctly, if you observe the here, you can see we had a high and a low and another high, creating this break of structure here. And of course, the market braked this high. This is the second zone, the second what? The second type of the zone flip. And that is the point. You put your entries there, and the stop loss is on the second candle here. It was just even 10 pips was not hit. So managed to get over 50 pips from that move. So we had these confirmation entries and all that. And of course, I don't know if you understood here. It's very tricky, but that is how we do it.
Okay.
So it's just
Need
the
to
matter
practice.
of understanding market structure and candlestick anatomy. If you understand those very, very well, you're going to trade this with confidence. And of course, you can see here we have a rounded test entry. You can see here, this is a break of structure. And then we have what? A micro test. When I say about my micro test, it's just a small movement. After the break, soon after the break, you have just a small movement coming inside that level, failing to break that level of break, and then later you have a rounded test market cam and take that entry there. You can see the stop loss if you put in the second um, candle, you were not hit, and you can manage to get all that pips. Although this was out of the program, you can just take it as an entry, but based on the program, this entry also, I don't think it was, I don't think it was inside the candle. I don't know. I will check later. But that is how that zone flip of micro rounded test is.
Okay.
So any question before I send another link for the confirmation?
No. So for now, I need to practice it. Then
Yes.
we can
It's
clear it.
very tricky to observe these types of entry, but when
Okay.
you have them, it is very, very good entries. When you have them, these are the best entry. I can show you one on a USD JPY. This is out of the gold using the same.
Okay.
Uh, I took, I mean, it was last week. I don't know, even the week before it was here. So you can see here clearly we had, I had this movement here from here to that point, and simply because it was a zone flip entry, this
Okay.
was my zone flip here.
Okay.
The market closed inside, outside and inside, then coming and close outside, breaking that level there. So I marked out this area. Some of my students, when I marked this and I sent this entry, and then they saw this movement here. They saw this movement here. The market comes and breaks above. The market come and breaks above. They started asking, sir, the entry is already taken. We can take the entry at this point, at this formation, inside this formation, or we can use this liquidity engineering here. I said, this zone flip has to come and be taken. And you can see that was my entry. The stop loss was on the second candle right there. And I managed to get almost 100 pips plus from that point, almost 300. You can see that movement always 300 something pips, but I just took 100 pips. I'm not so greedy. I took 150 pips here. I got out. So that is how we take these stone flip entries. And also you can see here, this is our last low. This is our last low. Okay. The last
Okay.
the last selling candle was this one, and you can mark out this level as your level of resistance or support.
Okay.
So you can see the market came inside here
Yeah.
and performed to break. Although if you put the stop loss in this second candle that breaks here, you would have been hit. But if you look closely, from that point there to this point here, it was 39 pips. You can't risk 39 pips. So whenever you have an area that provide more than 20 pips as risk, then you need to wait for a confirmation entry, meaning you need to wait for the market to come to that area and then to create another entry for you. For example, from here now, you can have we see here change of character, making this impasse move. And then from there, we have this formation as our entry. You see, the market comes here in this entry, and then you can take this entry here. So it is simple. When you have a position where it has a lot of risk, don't take that. Wait for the market to come to that area and create another opportunity for you. That is how confirmation entry works. Okay?
Okay.
So it's all
Okay.
about waiting, being patient. Do not try to risk a lot of money. Just wait. You can see here a beautiful break above, break below, creating a change of character, then inside formation. Or some people can use order block, or some people can use fair value gap. So you can see every strategy can work. It's just the matter of understanding market structure and candlestick anatomy. I
Okay.
always tell my student, any strategy can work. You just have to understand market structure. For example, here, order block, fair value gap, or
Yeah.
even if you're using trend line, you can see. You can see
Yeah.
trend line. Even if we're using if we're using Fibonacci, if you mark from this low to this high, you can see 50% of that fib, the entry. You see, so any strategy can work. It's just the master of understanding market structure and candlestick anatomy. I always tell my student that topic is the key on to success. Is the key.
Yeah.
Is the key. So just imagine in just this movement, any type of trader, anyone who use any strategy can get this entry. And it was almost from using a formation, it was 160 pips. You see, you can use just 100 and you're good to go. So that is how we use this zone flip. In case you have any question.
No, so far no.
Yes. Let me try to find another one maybe. We have almost 2 minutes left. You know, I hate trying to find entries that I don't take. I always give examples which I take because I like giving examples which are relevant. I hate finding examples. It is so difficult for me. I need to use examples which I took. You can see here. This is one of the best auction. You can see the last selling candle. You can use this one since it has a high wick. And inside there, the market tried to to perform multiple touches before breaking that level. You see? So after breaking that level, the market comes inside, and from there we had this entry. Now, like always, if you measure from the entry point to the second candle, it was 17 pips and it was hit. But if you used this candle, it was almost 45 pips. You can't lose, you can't risk 45 pips. So you wait for what? The confirmation entry. If you mark there, if you go to the lower time frame, maybe 15 minutes, you can see a confirmation. You can see a confirmation here. Let's see. Where is it? So here you can see the confirmation, and the confirmation, it was also a zone flip. It was also a zone flip. See, the market comes inside, and then we had this level as liquidity engineering, and also it was a zone flip. Why? Because the market tried to break that level towards this reclaim point here, but it failed here the first time, and the second time came and break that level, making a confirmation on this entry. So that was the same entry. And in case you missed this one, we had this second one, and it was a zone flip also. I can explain here. So if you look closely,